Business Focus with Kudzie, Sharara on the Champions League Breakfast.
10 minutes before 8 is our time. Good morning and welcome to Business Focus. You've got questions to do with business. Drop them up on our WhatsApp platform 0719 100404. Kudzie is with us right in the studio. Good morning to you, Kudzie. How are you?
Good morning, Tinashe. Good morning, Patsani, and good morning, everyone.
Great. How was your weekend?
My weekend was all right.
How did the Zimbabwe Stock Exchange closed off on Friday?
Yeah, we are seeing some mixed trading on the ZSE, Tinashe, and it closed out, say, flat because the all-share index was flat by 0.0%, and then the top 10 index losing just 0.09%. So you can see it's mixed trading. It's trading sort of like sideways. We still have some pockets of companies that are still recording very strong gains. I think those are those that were lagging when the market was having a bull run. So we are seeing those ones are also gaining ground. So Rio Zim was the top riser, up by 14.74%. Pro Plastics also putting on 13.7%. GB Holdings adding 9.89%. OK Zimbabwe putting on 6%, and then Kafka 2.87% to the good. Then on the downside, Fidelity Life was the biggest loser with a 10.14% drop. Zim Papers easing 6.52%. EcoCash down 1.92%. Tanganda also down by 0.47%. NMB also down by a similar 0.13% rather. So that's mixed trading that we are seeing. I think we'll continue to see a little bit of mixed trading depending with as investment managers and fund managers continue to digest latest information in terms of the 2024 mid-term budget review statement that was released by Finance Minister Mthuli Ncube. Obviously, people would want to see how they will be, their businesses will be affected by the new measures that were put in place by the minister. Interestingly, Tinashe, one of the measures that the minister announced was that businesses, especially those in the informal sector, are now required will be required to have or they are mandated to transact through point of sale machines and operate a bank account linked to the Zimbabwe Revenue Authority. But just as this information is still fresh, yesterday I went to one, I will not mention the retail outlet, but it's at Longsheng Plaza in Belvedere there. And yesterday, all their point of sale machines were not operating. In fact, both for US dollar and Zim dollar, they were not operational. So you'd wait in the queue for almost like 30 minutes, almost to an hour, and then you get to the 2 points and they tell you that we don't have point of sale machines. So I think so. As much as we can have these laws or measures, if there is no enforcement, then it becomes a problem. If we can't enforce such a big outlet at Longsheng not having a point of sale machines, operational point of sale machines, it shows you that it's just defiance of what would have been announced. So yeah, it will be interesting to see now how this is going to be enforced. When you can't enforce to the big retailers that are operating out in the open, how are you going to enforce it to the smaller players?
Just to add on that one, this is a mouthful, but allow me to read it all. This one says, please read my message or forward it to the relevant authorities. Apologies as the message is a bit long, but the Financial Intelligence Unit must do something about it. The governor said ZIG transactions are now 30%, but it looks like retailers have found a way of rejecting the ZIG. Yesterday, I bought meat from one of the famous butcheries along one of our major highways, and their prices are displayed in ZIG. However, they are offering 40% discount if you pay in USD. Imagine. The price of 1 kg beef was displayed as 150 ZIG, and they said it's $10.36 US dollar equivalent, seemingly converted at 14.8 is the rate. If you effect the 40% discount, customers are paying $6.21 US dollars while using the price of $6.21. The effective exchange rate becomes 24. If you pay 150 ZIG for the same product, since there is no discount on ZIG payment. I also experienced the same from one of the major hardware shops. This is daylight manipulation of the exchange rate. Are we now offering discount on currency of payment? ZIMRA discounts are being offered on cash payments or bulk purchases. If money changers are being arrested, these outlets surely should pay hefty fine from concerned consumer.
Yeah, I think that's needed, Tinashe. Enforcement is needed. We need to create a level playing field, because when you have some outlets abiding by whatever laws that would be put in place, and then others just defy, then it doesn't create a level playing field. I think we have highlighted it before to say there are other retail players that have accepted ZIG. And this 30% that they're talking about, if you then do a proper survey, you see the numbers. As much as the numbers might be growing, but in terms of acceptance in the supermarkets, in the business sector, it's a few players that are accepting this. And I remember talking to one of executives of a retail chain and saying that they foresee stock outs in their outlets because they're selling in ZIG, but when they go to their suppliers, they are not. The suppliers are not accepting ZIG. And yesterday, I witnessed it in one of their big retail chains, one of their big retail stores, where they are stock outs of several number of products there, for frozen meat, for example, your sausages, your chicken, your whatever you can think of that can be sold, meat or that is sold frozen. Yeah, they didn't have any in stock. And many other products that they didn't have in stock, because they're now failing to restock because some of the suppliers are not accepting. So yeah, these are the challenges we need to, when we enforce. Let's make sure that we enforce across so that we create a level playing field.
Let's look at other issues as well, Kudzie. So many questions are coming through. Let's look at the Delta trading updates. What's the latest from Delta? Yeah,
it seems like things are looking good for Delta. They are recording revenue growth across their product range. So for lager beer, their volumes grew by 9% compared to the previous year, and we are talking about their first quarter. And then you also look at their sorghum beer is the only one where they recorded volumes drop, about 10% volumes drop in the sorghum beer. And you can and for the first time they are admitting that the category was also impacted by competition from hard spirits, and then their own increase in lager beer supplies, and then investments by competitors in the same category. Remember, there is another that is now doing traditional beer, and this is the first time that I have seen Delta accepting that their volumes were affected by investments by competitors in the same category. So that's for sorghum beer, or in traditional beer, if you may want to call it that way. But across their other chains, sparkling beverages, not my soft drinks, Isuzu, they grew by 11% for the quarter. And then you go to their wines, which are sold under AFTIS, because AFTIS is also a unit of Delta. There they sold, volumes grew by 6% for the quarter under review. And then you go to their associate entity, which is Schweppes. Schweppes is also an associate of Delta. Delta owns a significant stake in Schweppes. And here, that's where the problem is. They're saying their volumes declined by 12%. So these guys are the ones that do your Orange Crush, they do cordials, and they are telling us that the issue of price, sugar tax, the sugar tax, which resulted in their prices moving from about $3.50 to $4.50, or from about $3 to $4.50. So this is now affecting their volumes. Now people are now probably saying, no, you're expensive, and look for alternative products. And interestingly, some of the alternative products, for example, the Mazoe Orange Crush, is coming from regional markets, because they are also produced in regional markets. In Zambia, they also produce the Mazoe Orange Crush, for example, and they are bringing them here, and they are being sold in the tuck shops, which is not our locally produced Mazoe. So these are some of the challenges with our tax laws. For example, this sugar tax, which resulted in an expensive product locally, but when it comes from the region, now it's cheaper, and people will just buy what is cheaper, what is affordable to them. And at the end of the day, they will reduce their production. At the end of the day, they might even end up cutting jobs, because they are now selling less than they were selling. So these are some of the things that we need to look at when you are putting up policies.
But when we look at the issue of beers in Zimbabwe. We have got mangwe ma individual importers and tengeso mangwe beers asiri ma product lines at Delta. Are they having any impact in terms of the figures that Delta have brought out?
Yeah, I think they are. For example, there are other brands that are also coming into the market from regional markets, and obviously they will have an impact in terms of volumes that are sold. But it's not as much as what has happened with Schweppes there, which has been affected quite significantly. But yeah, you see some brands that are coming in, even fake brands that have been, especially when it comes to the wines and stuff. I've heard from those who drink that they have to be careful because they have some fake brands that are coming in. Some are and some are actually being produced locally. Ongo iskos ma stickers zvezvi uto mototenga mchitota we uri kufaya apo wakagadzirwa backyard kumbaro. So those are some of the challenges that we are seeing. In fact, I saw a report in I think it's the Herald or Sunday Mail, which was saying about 300 and something stores that were fined for selling counterfeit and underweight products. So these are the challenges that we face when we have an informal market that purpose to sell brands, but the brands are counterfeit or they are actually of underweight, not of proper packaging as well.
All right. So this one says, I'm happy Kudzie, you also experienced what I experienced at Long Chen yesterday. It's so frustrating. I'm going to report them today. Okay, that's another listener who's saying that. All right, let's move on to something else. What are your thoughts, Kudzie, on the Reserve Bank of Zimbabwe's injection of more money into the market, about $50 million into the market?
Yes, so the central bank released a statement saying that they'd injected over $50 million into the forex market, and they are saying that they realized that there was a build-up of demand for US dollars, a pipeline of demand for US dollars that was building up, and then it prompted them to inject $50 million, which I think is when you just look at that figure to say, okay, you've put in $50 million, so that and the governor said that they've paid all the outstanding invoices that were in the market, which is, for me, it's fine. But again, it shows that there's something flawed about the willing buyer, willing seller market. Because why did we have all these outstanding invoices? They shouldn't be any outstanding invoices, because if it's a willing buyer, willing seller, it means that if you can't afford the money that is on the market, then obviously you have to bid up. Or if you can't access the money that you want, you put your bid up. If there are more buyers than sellers, the exchange rate should reflect in the exchange rate. So now the central bank is telling us that there was a build-up of invoices that were not paid. However, why didn't that result in the exchange rate moving? Because if you have got an exchange rate that is determined by supply and demand, you would expect that when there is more foreign currency in the market, we start to see the exchange rate going down. And when there is no foreign currency in the market, the exchange rate, it should reflect in the exchange rate. Whatever happens should reflect in the exchange rate. And I expect the central bank to then intervene when they realize that the exchange rate is moving in a direction that they are not comfortable with. For example, if it was moving to 16 and the central bank says, no, 16 is too high, given that this is a currency that we believe it's backed by gold. So the exchange rate should, let's say the exchange rate should be 14. Then that's when the central bank should inject when the exchange rate is moving against its expectations, not because there are invoices that are failing to find foreign currency. I don't think that's how it should work. The willing buyer, willing seller. I think it should reflect on the exchange rate, the average exchange rate in the market. But in this case, it didn't reflect. The exchange rate remained the same, and yet there was a shortage of foreign currency that required the central bank to intervene. So there's something wrong with that, because what we would want is, if, for example, there isn't much money in the willing buyer, willing seller, right? Those who are looking for foreign currency should bid higher so that they attract those who are selling. Because me and foreign currency, they cannot rate over from 14 to 15. I might be attracted to sell and say, 15 is a good rate for me, 16 is a good rate for me. Not kuti pasina kana movement yamboitika ku-exchange rate tonzwa central bank yakuti tainjecta mari. What prompted you to inject?
But hazvisiri zvere zvinodzokera kudhara kuyekwe kuti tinowanza mari nepanenge pasiri necessary. Is it necessary now or zvanga zvisati zvanecessary?
When you talk to importers, they'll tell you that there was a shortage of foreign currency in the market. But the question is, why were they not bidding higher? Right? And talking to some bankers, there is a belief that there is you can only move by 5%, a 5% margin, which both the central bank has said there is nothing like that. So I'm surprised why those who were looking for foreign currency did not bid higher to access foreign currency. It means that they are looking, they know that the central bank will intervene and offer them cheap money. So at the end of the day, the importers are getting cheap money at the expense of exporters who are having to surrender their money at whatever rate, 13, 14, they are surrendering their money because importers know the central bank will intervene even without them bidding higher. Because if you look at what happened in the stock market, on the stock exchange, if there are fewer shares on the market and there are more buyers, people will have to bid higher to get their shares.
Of course.
That's how it works. That's how it should also work in the foreign currency. Kana ma importers are not amuna, you bid higher so that you are the one and you access your money first than anyone else. If you overpay, market yours zika unongo trial and it unongo itika stock market izvo zvokuti nhasi ndinongoenda uno bid dot I need rotenga ma shares akati at price yakati. If you overpay, uchango try because kuchaya mwe seller cha offer lower and it. But we don't want a system where importers will just knock the busy to intervene. Talk about chingo complain muna mari, but indeed we are not bidding higher to attract sellers.
So Kudzie, how is this $50 million injection by the RBZ in relation to the exchange rate that is based on gold?
Yeah, the central bank is saying that it has got, it still has a 4 times cover of the money, reserve money, which is the money that is usable, that is available for transactions. The foreign currency that they have is 4 times more than the reserve money. So in terms of that, the exchange rate shouldn't be moving. However, I don't think the central bank should remain the only seller, the only willing seller on the market. Those who are buying, the willing buyers should bid so that they attract other sellers who are not necessarily the central bank. The central bank should only intervene when the exchange rate is moving out of its target. So you must have a target to say, okay, we are comfortable with an exchange rate of say 15, 16, 17. But if it goes beyond that, then we inject money so that we supply those who are demanding. But at the moment, we are just giving away foreign currency on the cheap because those who are importing, even though there is a shortage of foreign currency, they don't want to pay more.
Anzina Mofo Bikita, Kudzie, with the new willing buyer, willing seller, you don't even bid. You just put your invoice on the pipeline and the bank will give you a rate when you are allocated. He's willing buyer, willing seller.
He could be correct because for me, what we are saying is the willing buyer, willing seller. It's not a willing buyer, willing seller because the willing seller, why are we not getting willing sellers? If I go to and this was confirmed by one banker in the Treasury Department to say, if you go to Date Nash and say, US angwa, I want to sell at 16, you are dismissed outright. Avati, zvatinoita kuma stock market. If nhasi ndikaenda ku stock market ndikaenda ndikati ndinotengesa mashares angu pamari yakati, as long as it is within a 20%, 15% yavatinoti circuit breaker, I'm allowed to put that offer at that price.
Okay, Kudzie, thank you so much. Manje time yedu
tinotaura about static industrialization iri kutanga nhasi endai vanoda kuona kuti zvizvi zviri kuitika muAfrica in terms of industrialization. Let's go to HICC. There's a lot of companies that are exhibiting there. We can talk about it more tomorrow after today's deliberations.
All right, thank you so much, Kudzie, for Business Focus.